はい。皆さん、こんにちは。ジョーです。バックパックがですね、TG を迎え、そして、TG の後、たくさん素晴らしい新しいプロダクトを出していくということで、今日はですね、バックパックの CEO、ファウンダーのアルマニさんに来ていただきました。Okay, thank you so much for coming to the channel again. Today, obviously we are looking forward to the TG, so I wanted to ask things about that and also afterwards. And also, we announced great things recently. So I wanted to ask things about the US market and also recent hires and a couple of things that we had questions, or I personally have questions during the 3-hour long MA the other day we had. So yeah, thank you for coming. And then I think the last time we had a interview like this was about 2 years ago, 2024 January, and it's been about 2 years. Things have changed so far, but generally speaking, now we're going to do TG. How you feel about things in general?
Yeah, I mean, I feel there's so much to say with respect to the entire markets, the product, the company. I think the TG really is just the starting milestone, both for the community, for the product. Obviously, there's the token, but there's so much exciting stuff that we're working on, which maybe we'll get into it a bit during this conversation, that we just have our heads down and we're focusing on building.
Thank you. And also, I think, I don't know, or I don't like to use this term, narrative, but then now a lot of people and also companies, institutions now focusing on regulated or our path, our narrative. What do you think about this, this shift?
I think there's a lot of different ways that you can cut the question, but I think it's worth articulating maybe some motivation for kind of, at least in large part, why the current financial system is built in the way that it's built. And I think there's a really terrific case study if you just look at the history of something as simple as a stock. So, over the past, 100 years, right, stocks have evolved and have changed pretty dramatically, especially in the US. And there was a pretty important inflection point in, the late 60s and early 70s in the US, where there was this moment in time, it was literally called the paper, I think it was like the paper crisis, where, okay, so stocks used to be bearer instruments, right? So you would have like a physical piece of paper in the form of a stock certificate. And if you held that piece of paper, then you, by default, owned the stock. And a bunch of stuff happened in that time period that moved the world away from these bearer instruments. The first thing that happened was that it became just infeasible to deal with paperwork. Trading volume continued to rise, and in some ways, I suppose you can consider it a denial of service attack, a DDoS attack on traditional finance, and that was kind of what became this paperwork a crisis. And so folks came and they realized, okay, well, we need to change this. This doesn't work. And there was a bunch of other tensions that were happening around the same time that kind of converged together to create various different problems. The first one was just fraud, right? So when you have this piece of paper that says you own a stock, well, naturally you can forfeit, or you can create like fake versions of it, right? So you can, people did this with cash, and they certainly did it with stock certificates. You can just forge the stock certificate and say that you own the stock. There's burglary and robbery, right? You just go into somebody's house, you take the stock certificate, you steal it from them, and now you have it. There's all sorts of crime, right? Tax evasion. This became a big thing, I think, for Congress at the time. They literally passed legislation to help solve that problem. And you could just keep going on down the list, right? Regulators had a mandate to keep markets, safe, secure, and to maintain their integrity. And I think that's probably one of the single most important aspects of the market structure in the US, that people simply trust them. right? Things like insider trading, things like market manipulation, surveillance, and ensuring that there's proper trade reporting. And that is very difficult to do when you have a physical stock certificate and you have no way to actually monitor and to maintain the robust kind of integrity guarantees of the market that we have today. And so a bunch of these considerations and issues were part of that conversation. And what the world eventually did is they evolved out of kind of this physical stock certificate form into electronic trading systems, and things like DTCC came to life, where you have this intermediated market structure where when you go and like place a trade today through your favorite brokerage account, like an E-Trade or a Robinhood or whatever it might be, you go through several different parties that basically evolved out of this desire to get out of these physical stock certificates, right? So DTCC came along and said, okay, we're just going to be the canonical ledger for who owns the stocks. Get rid of all the paper. It's this entry in our database. And that was a big step function improvement to solve the problems that came out of that era. But when you fast forward to today, there's a bunch of new problems that exist. And I think a really kind of incredible example of this is this story around this company called Dole Food, which I talked about on the stream. So for folks that aren't aware, the story of Dole Food is really a story of all of the inefficiencies and problems that come out of the market structure that evolved out of the 60s, 70s, and the decades that came thereafter, where you had this company where the CEO offered to take the company private. And so he went out to the market, he bought all the shares, and the shareholders came about and they asked the question, are you giving me a fair price? And they concluded the answer to that question was no. And so what they did is they sued, right? They sued and went to the courts to fight for a larger price per share.
Right.
And the court ruled in favor of the stockholders, basically saying to the CEO of Dole Foods, no, you have to pay the shareholders more. And so, as part of that, the court ruled, okay, this is the amount of shares of something on the order of 39 million. This is the price per share. It was like something on the order of $13, $14. I forget the exact quantity. And so all the shareholders show up to get their extra cash, right? It was an additional like $2 per share or something. And that's a lot of money, right? That's like an additional $80 million at least that the company owed the shareholders. And the shocking thing that happened was that more shareholders showed up to receive their payment than was actually filed in the canonical record of who actually owns the share. So if there's like 39 million shares, something like, I don't know what the exact number was, 46, 47 million showed up. And so that was tens of millions of dollars unaccounted for in the, by the courts. And the subtlety that I think a lot of people don't realize is that, well, broker dealers, they're legally able to sell you shares that they don't have. And this is all kind of exposing as a bit of a leaky abstraction the underlying intermediated financial system that exists, particularly in the form of stocks. Or when you actually go and buy and sell a stock on your E-Trade or your Robinhood account, you're going through an introducing broker, an executing broker, clearing broker, maybe finally you get filled on a stock exchange. Then you update DTCC's ledger, and then underneath all of that is there's this transfer agent, right. Which is with the actual canonical ledger of who owns all the stocks, even though DTCC is really the one that everybody hooks into to keep track of margin accounts and things of that nature. And the issue with this structure that arose out of that paperwork crisis is that every single one of these levels, they're all different companies with different databases, different ledgers, and different concepts of who owns the stock. And I think, that was, I think, came out of necessity. And the current financial system does a great job of hiding this just to create a great user experience. Where when you actually go and buy and sell that stock, there's this settlement time that arises because it has to trickle down through all these different entities and market participants that have to update their ledgers and update their databases to record who now is the new shareholder of the company. And so that's the world that we live in today. And one of the magical outcomes of I guess, blockchains and why people are so excited about it, particularly on Wall Street and traditional finance, is the promise to be able to collapse this intermediated system into a single globally shared ledger that you might call, a blockchain, because the blockchain is this incredible database technology where you can collectively get a bunch of different parties, right? You can have different broker dealers, you can have traders, you can have DTCC, you can have the company themselves, you can have the transfer agent, and they can all just look at a single database and say, this is the source of truth. And that's really a direct consequence of the trust minimization properties that blockchains give you. And so we're kind of seeing the world come full circle, where we went from these bare stock certificates to this intermediated financial system where you had all these different kind of market participants to be able to execute a single stock, but which facilitated electronic trading. And now we're going back to the bare instrument because we have the technology to facilitate it in a way that solves all of the original, I guess, design constraints that gave rise to solving the problems of that paperwork crisis and all the concomitant issues that arose from that. And so it's this, I think, incredible transformation of market structure that we're really just at the beginning of. Like, this is going to happen over the next several years, over the next decade. On the one hand, the crypto market is in a pretty, anxious place right now, just given, asset prices are down all across the board. And, I think it's fair to say it's a bear market at this point. And, markets are cyclical, they go up and they go down. But if you talk to anybody in traditional finance, whether it's institutions on Wall Street, the trading firms, the hedge funds, or the regulators, I think folks have never been more excited about the promise of, blockchain technology and cryptocurrencies than they are today. So yeah, it's an incredible time to be building. But I think that's a big part of the motivation for, I think, a lot of the stuff that we're building today.
I see. Thank you. And also, I think a lot of users are very excited about, being part of the community. And now we are issuing our tokens. And obviously, we announced equity conversion. What are the motivation of you doing this, or you think this is, you have a benefit of exchange itself?
Yeah, so I think there's several different motivations. So the status quo for tokens today is really, I think there's a lot left to be desired, and there's plenty of examples of this. I won't kind of throw any kind of particular projects under the bus, but there's always this question of centralization, decentralization, and value accrual. Like, who actually owns what? And when you actually buy a token, like, what do you actually own? Right? Is it just a meme coin? Are you buying it for the utility? Is it a security and you're buying it for kind of, other reasons? Is it a stable coin and you're just trying to transfer value all around the world? And I think the industry is in an inflection point right now where, there's been a lot of experiments over the past, better part of a decade at this point, in particular on the smart contract platforms. There's been a lot of dreaming, and there's been a lot of incredible shots that have been taken on goal, and there's been a lot of missed shots that have been taken on goal. And I think the current, state of what it means to own a token tends to really be you're owning a promise, a hope, and a dream, and you're at the behest of the project. You are at the mercy of whatever that project might do, but ultimately you don't actually own anything, right? If a company comes along, they create a token, they build a community, maybe the project doesn't work out, or maybe they pivot, the project can go and create a new token and put all the value over there. The project can get acquired. And there's been plenty of examples of this where the token holders don't get anything. The project can simply choose to divert value outside of the token. Because it's they're a team, and maybe it's centralized, and they can do whatever it is that they want to do. And it's not really until a token becomes decentralized to the level of like a Bitcoin, an Ethereum, a Solana, right? You can count the number of these projects on a single hand. That is the token sufficiently robust to call itself decentralized. And so I think for us, the equity conversion concept is an attempt to solve a lot of these problems. It's an attempt to build something that's never been done before. It's an attempt to infuse an additional layer of value into using a product in combination with a company like Backpack that has never been done before. If you take, for an example, any of the exchange tokens, right, whether it's BNB, whether it's the Gate token, the BitGet token, the OKX token, the FTX token, although FTX is its own kind of a crazy story. Well, those are great tokens, and exchanges are great products, and they've, have built incredible things, but you don't actually own or have a pathway to get any equity in the underlying company with those assets, right? And that's true for centralized exchange tokens, but it's also true for DeFi projects as well, especially in the context of progressive decentralization, where most projects they could be acquired at any given time, and so it would be nice if, for example, you had an exchange token like BNB is a great example because it's the largest, and it's also evolved far beyond just the Binance exchange. But if you had an additional option to get Binance equity, by holding BNB and using their exchange, that would just be strictly superior to just the BNB token, right? It's like you just get more utility. And so I think, what we're trying to do ultimately is just infuse as many underlying kind of utilities into the token and incorporate it into every aspect of the product, whether it's the exchange or the wallet or any of the future products that we're building, whether they're centralized or decentralized. That underlying equity conversion utility, it always exists really as a, in large part, a protection mechanism to address a lot of the problems with tokens today. So we're really excited about it. I mean, it's something that's never been done before. My guess is that it's something that if we're able to pioneer it successfully, then hopefully other projects will come along and do the exact same thing. And I've received tons of inbound from other founders and other projects that are interested in doing this. And so I think it's part of this overall change that we're seeing in the crypto industry where, it's really growing up. It's really starting to mature. People want to have great products. They want to own great assets. They want more than, promises. And they want, to see kind of the industry evolve as kind of, DeFi merges with CeFi and crypto converges with Wall Street. And so I think that's really the story and I guess where we're coming from.
Thank you. So next point is after the TG, I think a lot of utilities we skipped it today because we have a limited time. But then what's going to happen after TG? We're going to have another seasons because some of the portion of tokens not going to be distributed at the TG. So is there more things going on, or what's the plan?
So the token supply can be broken up into two different components. There is the component for users, and then there is the corporate treasury. The tokens that are being allocated for users, it's used for one thing, it's for growth. It's like fuel being thrown onto a fire to accelerate the go-to-market to expand the user base. Now, the unique thing about Backpack is that today we only serve about 48% of the world.
Yeah.
Right? We don't serve any traders in Japan. We don't serve any traders in the US. And we're not serving traders openly in Europe at the moment. And a big part of our growth is going to come from two things. And it's going to come from geographic expansion in those regions, and it's going to come from new products, right? We are very different than the large majority of crypto projects in the sense that we're trying to build a regulated financial institution. And that is a completely different path than building a product, opening it up to the entire world, launching a token, and then that's the end of the line. Maybe you obviously expand the product and hopefully can build a robust decentralized protocol. For us, we're really launching the token very early in our larger roadmap and company's life cycle because, well, firstly, it just takes a long time to do any of this stuff, or doing this conversation here in Tokyo, Japan. I moved to Japan 3 years ago, right? I moved to Japan 3 years ago with the sole purpose of being able to build a company here and being able to get licensing and get a bank account and be able to create incredible product in Japan. And Japan's got an incredibly vibrant crypto community, but there is not that many exchanges here, right? There's not a single American exchange here in Japan, right? Coinbase doesn't exist, Kraken doesn't exist, Gemini doesn't exist, Robinhood's not here, and we hope to be one of the, I guess the only American exchange here in Japan, and so I think for us, we fully intend to, do targeted seasons and targeted token campaigns in these respective regions as we bring the product into the market. So when we are able to finish up the licensing here in Japan, then we'll do a campaign for the users in Japan. When we open up our product in Europe, we'll do a campaign for the users in Europe. When we open up the product in the US, we'll do a campaign for the users in the US. And we'll keep doing this for new geographies and importantly for new products, which maybe we can talk about as well.
Sounds good. Yeah, since you brought up, our growth in terms of product and geographic, I want to touch upon the product side because, after the point season, obviously activities has dropped, and also it's on the weekend too, and not just for us, but for most of our other exchanges as well. But our asset under custody hasn't changed at all. This shows a lot of positive appetite from our users. Not just to our product, to our brand, but I think our upcoming product after TG, I think you mentioned we're gonna launch multiple great products pretty soon, right? Can you talk about something about those?
Yeah, sure thing. I think volumes, open interest, everything is down across all exchanges across the board. I was looking at the numbers today. Backpack was doing about 250 million in perps volume. Kraken was doing about 260 million in perps volume, but it's a Sunday, so the weekends are always quite slow. Yeah. And I think this has been in large part a consequence of this slowing market activity post 10/11. In terms of the new products that we're working on, there's a bunch. So there's 3 big products that are going to be coming out over the next week and over the next couple months. Mm-hmm. So the first one is going to be prediction markets. So the core thing that we're doing with prediction markets is, well, firstly, we're not wrapping an additional prediction market, which is something that you see most people do, right? They'll create a UI for a Kalshi or a Poly market, and that's that. It's not our intention to simply copy those products, right? We want to build something that's never been done before and that doesn't exist on the market. And so what we've done with prediction markets is we have created the unified prediction market portfolio, where you'll be able to trade spot margin, bar lending, perpetual futures, and prediction markets all in a single cross-collateralized unified portfolio. So you'll be able to do things like depositing your Bitcoin into the exchange. And then the same way you can use that as collateral to trade for perpetual futures, or you can borrow against it and withdraw dollars from the exchange. You will also be able to use that Bitcoin or whatever collateral asset you have, Sol, ETH, HYPE, whatever it might be, and you'll be able to use it for prediction markets. And so we'll be opening up prediction markets probably around TGE, maybe at least within a couple days. We're really going to focus on finance-related prediction markets, at least in the beginning. We have the NBA Finals coming up and the World Cup coming up, and there's a lot of, I think, experimentation that will be done in the prediction market space, both from us and others, that I think will be really exciting. And so I think the first thing that we're doing is just introducing the unified prediction portfolio into the world, and really being, I think, one of the most high performance and reliable prediction market exchanges in the world, right? Because building perps, it's a very different animal than building prediction markets. The scale of the systems is, at least in volume terms, is at least an order of magnitude higher. And so I think that's the first thing people will notice. They'll go and use predictions on Backpack, and they'll see how great of an experience it is. And that's the first thing that we're really focused on. So we'll be doing things like the up-down markets, crypto prices, not just for like Bitcoin, Sol, ETH, XRP, but you name it, right? ADA, and every token that you can possibly imagine. And then I suppose there's a bunch of other stuff with the prediction markets coming down the pike, but I think I'll leave that for now, and we can chat about other things. So the second big product that we're going to be working on, or that we are working on, is stocks. So the big difference between, I think, the way we're doing stocks and the way that most other folks, I think, in the space are doing stocks, is that we're setting up a traditional broker-dealer to trade real stocks in the same way that you would trade it on Robinhood, with a couple key differences. And going back to the story of U.S. market structure and the intermediated financial system that I was articulating earlier, there's several key, I think, points that you can pull out of that conversation. The first key point is that you need to have real stocks, because if you don't have the real stock, then you can't actually participate in something like the Dole Foods fiasco, where you have a shareholder lawsuit and you're owed a bunch of money, right? So the legal protections of owning a stock is a big part of why there's so much liquidity in stocks, right? It's not just some random assets. You have, what's something like a security entitlement. You have statutory rights, right? You have legal protections in the event that there's a class action lawsuit, in the event that there's a bankruptcy, and so securities laws matter a ton. And so this is one of the key things that was really important for us, right? We want to do not just equity futures, and that's like a big thing that's taken off recently, being able to trade stocks and commodities on perps, but importantly, to be able to actually have the physical spot asset inside of an actual broker-dealer, so you can actually buy real shares in the underlying company. And the key thing with this is that you have to KYC. This is like the big, and people don't like to hear it, and it's not the sexiest thing to articulate, but it's just the honest to God truth, right? Securities laws matter. Companies are legally required to know who their shareholders are. And so, the fact of the matter is that if you want to own an actual stock, not get synthetic price exposure, not just trading on perps, if you want to own the real thing, then you need to have a broker-dealer, you need to have KYC, and building that is very different than building a traditional crypto product. And this is one of the core reasons why we went the regulated exchange path. This is one of the core reasons why we decided to not be a DEX, even though in large part the way that the exchange is built looks and feels very similar to a DEX. It's because when you want to go after regulated assets with regulated counterparties, well, you need regulated markets. You need to be able to follow securities laws. And it's only when you do that can you actually serve not just crypto assets, but the traditional assets as well, right? Whether it's getting a bank account for yen here in Japan, or being able to get stocks on a national stock exchange. And so that's like the first kind of key thing. The second key thing is also, if you go back to that conversation around the evolution of stocks from stock certificates as a bearer asset to electronic trading systems where you have an intermediated setup with settlement time, back to tokenized stocks where you go back to the bearer instrument and you go back to disintermediation. That bear concept, it's a really subtle one, but it's a really powerful one. So, to understand this, it's worth, just at a high level, kind of revisiting the way that margin systems work in traditional finance as well. So normally if you have like a brokerage account, you're trading on margin, you'll get margin called if, your margin goes below some margin requirement. You have like 24 hours or whatever to go deposit, your assets into the exchange so that you can, fix the margin call. And if you don't do that, then the broker or whoever is legally able to go after your assets off the exchange, right? They can go after your mortgage, your bank account, your retirement portfolio, whatever it might be. And a large part of that is, due to settlement time, right? So you have these risk management systems that are have to consider settlements. They're not real time, right? That's very different than something like trading a perpetual future, where, anybody that's traded a perp in crypto will tell you if your MMR goes to 100%, then you get liquidated instantly. And that's what gives rise to higher capital efficiency, gives rise to the perpetual future. It allows more trust minimized margin systems to be built where, on a blockchain, if you withdraw, there's no I can't go after your mortgage, right? I can't legally go after you, right? And so the margin systems in crypto have been built to be fully collateralized. Yeah. And so when you combine these two concepts together, right, the real-time margin system and stocks returning to be a bearer asset, right? This is basically what Cash did with stablecoins. It went from sending wire transfers or ACH or SEPA or PIX or whatever it might be, where there's settlement time, and you go from that to stablecoins. You can send dollars anywhere around the world, right? And that's in large part why stablecoins are such good collateral for these real-time margin systems, is because you have the physical bearer asset to be able to use for these high leverage, very capital efficient crypto margin systems. And so when you combine these two things together, not in the context of dollars as collateral with a stablecoin, but now in the context of stocks as collateral with a real-time margin system, then you have something that has never been built before, where you have 24/7 trading, instant settlement, but importantly, real-time risk, real-time collateral, and a new margin system that has never been built before. And so that's one of the key things that we are working on right now that'll be released sometime, I'm terrible at timelines, but sometime in the next 1 to 2 months, where you'll have a traditional brokerage account where when you buy and sell the stocks, you're hitting TradFi liquidity. So you'll have good liquidity at the national best bid and best offer under something like Reg NMS. And importantly, you'll be able to use that as collateral with a real-time margin for predictions, crypto, perps, and stocks, all in a single unified account. And once you kind of have built something like that, then we can start talking about I think genuinely building an upgraded financial system. And so that's in large part a big reason why we're focusing on spot right now, right? You can't buy spot stocks with real security entitlements on any DEX. You will never be able to do that unless you KYC. And once you KYC, you're no longer a DEX. You're now a SEX. And once we have that, then we'll introduce equity perps. And that is the big thing that we're marching towards that I think the whole team is really excited about. And so that's the stocks conversation. Yeah. There's one more product, but I'll stop there.
Okay, right. Since you cover the stock, I remember when Xstock and also Ondo Finance, they announced those products, and then all the other exchanges FOMO into it, and then they try to list it, and then they allow their users to trade with those products. But I think we quickly decided, or we've been determined we're not doing this just because because of the reasons why you just explained. But why you're able to make the decision, or you already kind of had the vision, or you already kind of working on things like that for a while, or I think obviously that time everybody went into it, but we didn't. Why?
Yeah, I think so. Firstly, it's worth saying that I think Xstocks, Ondo, and all the folks that are doing that, I think they're pioneering things that have never been done before. And they're taking, very interesting shots on goal. And I think you've got to kind of show respect to kind of what they've been building. I think it's incredible to have economic price exposure to people that maybe don't have access to it. But it's a very different product than owning the actual share. And I think ultimately what we always try to do is just think about something like fundamentally, right? I would ask myself the question, like I have a brokerage account, I have a retirement account, I own stocks. Am I going to put that into a synthetic asset? And the answer to that is clearly no, I'm not going to do that. And I think most people are not going to do it, right? I want to have the legal rights and the protections and all the statutory rights that a security entitlement gives you. I think the other part of it is just the liquidity. And this is, I think, one of the very fair criticisms is that there's just no liquidity on these assets. And you could have the best product in the world, but with no liquidity, and people still aren't going to use it. And I mean, to state the obvious, all of the liquidity and price discovery for stocks happens in traditional finance. So if you want to build a good product, you want to have good price execution, you want to have good liquidity, just tap into traditional finance, and so that solves like the two biggest problems or critiques I think one might have on the products that you mentioned. And so yeah, if you stop and think about it, you could take a shortcut and list those assets, and it might be interesting for a moment of time, or you can just go straight to the end state to build the product that you want to build. And so I think it's unclear if anything is right or wrong, but I think that was in large parts, the decision-making process and why we felt compelled to set up a broker-dealer and get real stocks onto the platform.
I see. And then I want to go to the next growth pillar of our business, which is geographical expansion. And what we are really looking for to tackle very hard is the U.S. market. We just announced hiring of the Mark, which is the president of Backpack US. What are the impact of him joining us, and also like what's your expectation or something that you can talk about our US expansion at this time?
Yeah, so I mean, Mark is an incredibly talented individual. The U.S. is just, the U.S. is home, right? It's not only the largest capital market in the world, but it's also just the place where I grew up and just want to serve my home, right? Yeah. It's like, imagine being Japanese and not serving Japan. It's like kind of like heart-wrenching. Like, how can you not do that? So there's some base level of like, okay, you just got to serve the U.S. I think, for better or worse, we've always taken the position as we've been building the exchange is that we wanted to dot every I and cross every T to do regulation the right way. Because when you are kind of going down that path, then you can firstly solve or serve products that nobody else can serve, right? Whether it's on and off ramps, real stocks, or get access to regulated counterparties, whether it's institutions or whatever it might be. And so, whether it's the US or in Japan or Europe or the UAE or wherever it might be, we always have really cared a lot about doing all of the hard things to get regulated. And doing that in the US is obviously a North Star of ours, where Mark brings to the table decades of experience, whether it's his time working at the CFTC or his time as the CEO of a futures exchange himself. And so the significance of him joining is really kind of the story of decades of real world experience working on this stuff. Where if you want to build a globally regulated financial institution for the future of money, there's no better person to bring into the team. And so, we're really happy that he's joined, and we're really excited about everything that we're doing in the U.S., especially since there's this incredible tailwind and just collective desire to bring crypto markets onshore into the United States. And so, it's a long road ahead of us, but I think there's nobody better equipped than Mark and kind of the Backpack team more broadly, and we're really excited for it.
Sounds good.
And I want to talk more about EU and Japan. And I think, like you mentioned, Japan, there are no US exchanges. And a lot of people say Japan is sleeping giant, but like very slow and not sure about how big the crypto market is becoming. And also the EU, because of the licensing also, a lot of, I think, exchanges, they think EU is not, big market or yet at least. But I think for us, I think we have a different stories. Can you talk more about that?
So I think in Japan, I think folks that are Japanese probably understand this better than folks that are not Japanese. There's a very rich history of crypto here, right? Binance was famously started in Tokyo. Going back to 2017, over 50% of global Bitcoin trading volume was coming out of Japan. Then, okay, what happened? Mt. Gox and various exchanges got hacked. And for better or worse, regulation pushed exchanges offshore outside of Japan. And I think there's a couple like really incredible examples of companies doing really well in Japan. Obviously, there's the regional exchanges here, which build incredible products, right? The Coinchex and the Bitflyers of the world. But even something like FTX, where they were regulated here in Japan, and the Japanese entity, to my knowledge, was fully solvent. And so there's a sense that it kind of worked here, right? And you fast forward to today, what's happening, right? You see, both the previous prime minister and the current prime minister going to crypto conferences at times and starting to talk about crypto. You see, well, as we said earlier, no, there's no American exchanges here. A lot of the unregulated exchanges are now being pushed offshore. You see this widespread expectation that taxes are going to come down from 55 down to 20%. And, similarly similar to the US, a really strong desire to bring, responsible and innovative financial kind of services businesses into the country. And so I think, Japan is obviously, an incredible country, both just from a cultural point of view and a standard of living point of view. And I think, the time is ripe for kind of crypto to really start kind of coming back into the country. And you can see this with all the activity on all the perp dexes, where there is just an enormous amount of trading volume coming out of Japanese users. You can go into any of the discords and you'll see like the number one emoji is always the Japanese flag. Some of the centralized exchanges that were operating here, maybe in an unregulated fashion, I think famously had a ton of volume here, and so I think Japan is third, fourth largest country in the world by GDP, a history of excellence and financial innovation, a really strong history of crypto evolving in various different ways here. And so, we think the time's right to build a new exchange here in Japan. And we've been working on it for 3 years, trying to do things the slow way, but hopefully a way with a very long-term mindset. And hopefully we can, get to the finish line on a lot of that work this year.
Right.
Yeah. So the story with Europe is very similar, although kind of different. So Europe's just a huge market. I think Bybit famously just did a ton of volume in Europe, although they're now they're no longer, they're kind of shut down in Europe, their derivatives exchange. But Europe is, again, one of the largest economies in the world if you collectively look at all the countries in the European Union. And I mean, the state of derivatives in Europe is pretty surprising to folks that maybe aren't in the region, where all of the largest derivatives exchanges are just shut down in Europe. Binance derivatives shut down, OKX derivatives shut down, Bybit derivatives shut down. You just keep going on down the list, and there's really not any major derivatives platforms that are live in the region. I think Kraken is the only one with a genuine perpetual future, at least of the large kind of crypto native exchanges that people know and love. And so that's another region where we have been working on that for really 3 years. We're finishing up our MiCA licensing right now. That'll hopefully be wrapping up soon. And we're going to go into Europe, and we're going to go into it in a big way, right? Where you have, again, basically this green field of opportunity where there's really only the DEXs in Europe right now offering a competitive product. There's obviously Kraken, and so it's one of those kind of regions where we've done no go-to-market. And so that's just going to be another huge just tailwind for Backpack over the next year. It's literally just open up the European market.
Mm-hmm.
And we're really excited about that. And that's going to be kind of the culmination of just years of work.
Yep, thank you. I have several more questions out of the 3-hour MA. So I think you mentioned we have about 100 people, whereas other exchanges have like 10x or 20x, sometimes 50x. How can you build like this great product and also so fast-pacing licensing? Some people say slow, or we are slow, but then in terms of license, we are like really fast rather. But with just 100 people, how can you like do this?
So I think it's important to understand the difference between building a regulated company and an unregulated company. Mm-hmm. It's probably 10 times easier or less work to build an unregulated company. You just focus on the product and that's it, right? But when you're building a regulated company, you not only have to build a great product that users love, but you have all of these layers of additional compliance requirements that go into building the product. Everything from the copy that's on the page to the way you do market surveillance, the way you KYC folks, the way you build your risk engine, the way you do liquidations, right? These are all things that have to be approved by, it depends on the region, but you have to be approved by regulators that are supervising you. And so it's not just about building a product. If you're building a regulated company with regulated market structure, it's a whole lot more than building a great kind of exchange with a beautiful product. Mm-hmm. There's all of these kind of compliance requirements underneath. And so on the engineering side, I would say we're extremely lean. Right? We have an extremely small and talented engineering team where we have, I think the exact number, it's probably on the order of like 26, 27 engineers for everything. This is for the wallet on the Chrome extension, the wallet for the mobile app, the exchange on the mobile app, although it's the same mobile app, different teams, the exchange for the web app, the whole internal admin dashboard that we use to operate the company. We do KYC and compliance and monitoring. That's not a public page, but it's a tool that we use. And the entire kind of back end of the exchange, which in and of itself is its own replicated kind of state machine. It's a permissioned blockchain, if you want to call it that. There's risk management, clearing, settlement, markets, risk management, fiat on and off ramps, all the deposit and withdrawal integrations on all the different exchanges, right? Just that alone is something that I think a lot of people don't realize is like you can just send USDC and USDT anywhere on basically any chain, which is, there's only like a handful of crypto companies on the planet that even have that feature. The whole vault and trading infrastructure that we use to provide liquidity, it's an enormous amount of breadth for a very, very, very small team. Right, most folks tackle one of these problems. Right, you'll have like a PerpDex team that all they do is just build clearing, matching, and settlement. You'll have a team that only does bridging. You'll have a team that only does fiat. Right, you'll have a team that only does a wallet. You'll have a team that tackles one of these things, but building it together in a single vertically integrated stack is, I think, a very different task, which gives you a very different product. And it's like, okay, how do we do it? I mean, I think a big part of it is just like having folks that have done it before, right? Where we're not like guessing at any level along the way, whether it's on the engineering side or on the licensing side, or even something like the customer support side, right? And so I think obviously the answer is simple, and it's the same answer for probably most companies. It's like, okay, hire great people. And it's like, okay, that's not very helpful. What does that mean? But I think, it's ultimately a function of the team, and it's kind of as simple as that.
Yeah, thank you. And also another question is, a lot of other exchanges, they expand their businesses by acquiring either exchanges or some teams in the DeFi space or whatsoever. But I think we haven't really done much, but FTX EU was one thing that like publicly famous, but I think we've been building the whole thing from the scratch. Why this is, I think, the main way of expanding a business other than rather than acquiring.
I mean, there's always this question of do you build, do you buy, or do you partner?
Mm-hmm.
I think buying tends to be just very difficult because not only are you spending money to buy somebody else's product, then you have to integrate that team, that product, and there's a ton of hidden costs in doing that I think invisible to kind of the untrained eye, but very clear if you come from a product and engineering background. And so it ends up like being just like a lot slower and harder, ironically, if you just acquire a million different companies and try to integrate them into your product. I think on the one hand, we are building a lot and there's a lot of breadth in the product. But on the other hand, everything that we build has multiplier effects on the product. It's like we're not building, the exchange and then, an NFT marketplace, right? We have an exchange, and we have a self-custodial wallet. And those two things go hand in hand. It's in the same app. We're not building DEXs. We're not trying to like compete with, on-chain or decentralized products. But we can have a self-custodial wallet where people can actually go out and use DeFi and use kind of Web3 applications. And they can deposit and withdraw directly to and from the exchange. It's a very natural experience. And so every kind of time we decide to, do we build something, do we buy it, or do we partner, we're kind of always asking ourselves, is this like part of the stack that we actually want to have core competency in? And I think obviously the custody aspect, whether it's self-custody or the custodian ourselves, is something that goes hand in hand with everything. And I think if you allow me to be self-indulgent for a moment and to bear with me for this metaphor, I think a really appropriate metaphor for what we're building is Amazon, where, Amazon built this, incredible bookstore. That's what they started with. But in order to build the bookstore, they had to build not just, a website and a great application for users. They had to build all this stuff underneath it, right? Things like logistics, but importantly, something as large as AWS, where they just had to build warehouse scale computing. They had to create new algorithms for scaling their systems. And that was required for them to build a, electronic bookstore on the internet at scale. And so we're not building a bookstore, we're not building AWS, we're building this finance app. But in order to build a finance app that we want, where we want to be able to own fiat rails. Mm-hmm. You should be able to buy Bitcoin with yen directly from your phone like that, right? We want to be able to deposit and withdraw not just Bitcoin. We want to be able to serve, Solana users and that ecosystem, folks on Ethereum, folks on every chain. We want to be able to have a great financial product with this great kind of unified margining system. We want to be able to have clearing, settlement, matching, all these things. We want liquidity. Right. And well, once you've built all of this just to service your, financial app, well, then you can go and, maybe you didn't build AWS, maybe a more appropriate description, you built kind of the AWS of money, right? All these primitives that other people can hook into if they want access to, crypto technology or regulated market structure for kind of, whatever their applications might be. And so this is like a very long-term perspective. Mm-hmm. We're really focused on the retail experience right now. But when it comes to building regulated market structure, getting licenses, having this kind of, all these primitives in one kind of stack allows you to expose them to, other folks that might not want to build it themselves. And so I think that's one of the things that we'll be pretty focused on as we expand beyond just the retail product and expand the business line to incorporate, not just retail, but institutions and any folks that want to get access to crypto.
Sounds good. I wanted to have more questions, but I think you have to catch a flight. So the last thing I want to ask you, or I want to ask you to do is give some message to the Backpack users or Backpack future users who are expecting or looking forward to our growth or the TG and also a lot more.
Yeah, I mean, I think to understand Backpack, I think you have to understand, a large part of kind of where we come from and where we're trying to go. I think there's many lessons that we learned from FTX. I think one of the key lessons is that what rises fast falls very fast. There's a bunch of other lessons, obviously. Mm-hmm. And so we are very long-term oriented folks. We're very happy to do things the slow and steady way, brick by brick is the mantra, with the hope and the foresight that that's how you build something to stand the test of time. And if you love the product, and if you're really excited about this convergence between not just crypto but crypto and traditional finance, to really understand, I think, why we're building in the way that we're building, it really kind of requires like internalizing that very long-term perspective that we take to building the product and building the company. Right. If we're lucky, it's something that we'll be building not just over the next year. It's something that we'll be building over a decade. If we're really lucky, over an entire lifetime. And if we just opened up like the US tomorrow, right? That's what every other crypto project does, right? We would 10x all of our numbers overnight. It would be an incredible thing to do, but it would be a shortcut, right? And we're not really the types of people to take that path. Yep. And so, I think that's kind of like the core thing that I would walk away with if you really want to understand Backpack and what we're building. Right? If you can, liberate yourself from thinking about a single cycle and really think about kind of a multi-year time horizon, then it frees you up to make, I would say, different decisions. And I think that's the spirit with which we've been building the company, and hopefully something that we can embed in our DNA for kind of the years that follow. So that's kind of us in a nutshell. And thanks for all the questions.
Sounds good. Okay, thank you so much, Famani. Looking forward to maybe another interview when it comes. Thank you so much.
Cool. Thanks, Joe.